Hi there, JD.com versus Alibaba. Which one is cheaper at the current price? To tell you the short answer, both are cheap. But maybe you noticed that JD.com, when all Chinese stocks go up, the increase in the stock price of JD.com is higher than Alibaba. But the opposite happens. When Alibaba goes down by 5%, JD.com goes by 7%, for instance. Just watch closely the stock prices, the movements. When Alibaba goes up 5%, JD.com goes up 7 to 10%. And here is the important thing. If you look at their market caps, JD.com has 51 billion, right? Alibaba close to 300 billion. And this is the key. This is why JD.com grows higher in stock price than Alibaba, because of the size. Now, going forward, predicting the future of those two companies and which one will achieve a higher return, you have to look at their businesses to understand how they operate. And then try to predict how much money they can make in the future. By the way, in my previous videos, I discussed a lot about Alibaba. So if you are curious, you can watch it. Now, to understand if JD is a better investment than Alibaba, you have to look at this business and understand it. If you look at the revenue over the years, you see a great performance. Compound annual growth rate of about 15% from 2019 to 2024. And you see here, quite amazing. Then, if you look at their segments, they have JD Retail, JD Logistics, and other businesses. New opportunities. And this is important, their logistics, because without it, they can deliver this JD Retail. Now, you probably know the competition in China e-commerce. You see here, Taobao, Tmall, 31%. Then JD, 16% of market share. And the most important thing, if you look at this company, just look at their fundamentals. Just look at their fundamentals. Here, their cash position. Look, cash and cash equivalents, short-term investments, some investments, and marketable securities. If you do the math for all these numbers, they have in total 373 billion renminbi. This means in dollars 51 billion. And wait for a moment, 51 billion in cash, all the cash, excluding debt, all the cash. 51 billion in cash with all their investments. And look, pay close attention to the market cap, 51 billion. So the stock price of JD.com is about their cash position plus investments. Only their cash and investments are 51 billion, the current market cap. And then, don't forget that they are profitable. This company, over the last years, generated in free cash flow, for instance in 2024, 43 billion renminbi. How much does it mean? Convert 43 billion into US dollars. So close to 6 billion in free cash flow for 2024. So you have 51 billion cash and investments plus close to 6 billion in free cash flow. This means you can easily have a double from this level and even a triple. The market cap can go to 150 billion. Only if their growth rate continues. They maintain this free cash flow and continue to increase. You have this increase in their free cash flow. And it's quite nice over the years. So you can have a 3x from JD.com, from this level, 150 billion. And this is possible. This is possible. I mean, the stock price can go back to 3x, that means $90. This is possible. If you are an investor in JD.com, 3x is your upside. And even more if they continue to grow. 3x. Now, as I said, you have to compare JD.com with Alibaba. Which one is better? If you look at their sizes, JD.com wins because they have a small market cap. Now, They also have an advantage, JD.com. They have a logistics segment. And if you compare with the competition, PDD Holdings doesn't have their own logistics. But JD and Alibaba, they have their own logistics. And this is good. Then you look at their profit margin for JD.com. See here, net profit margins, right? Over the years, from 2019 to 2024, their profit margins have increased from 1.9 to 4.1, right? And this is important because if they don't maintain their profit margins of about 4%, go down to 2%, then also their free cash flow, their final earnings will decline. So you have to be careful here. And ask yourself if they can maintain their profit margins. And to answer that, you have to look at their costs. What's their highest cost? Cost of revenue. They're buying their own merchandises and try to make a profit. Right? You see here revenue. Here for 2024 Q4. 346 billion renminbi and cost of revenue 293 billion renminbi. So they have quite thin margins. Be aware of this. Now compare this with Alibaba. Here, Taobao and Tmall. Revenue 146 billion, adjusted EBIT 61 billion. So their margins are higher than JD.com. And you have to ask yourself why. Because Alibaba doesn't buy their products. They only charge a fee, a commission. They sell advertising to merchants. And that's the difference. And then you have to think for yourself, which business model is better? This one? Or from JD.com? Or from Alibaba? Just ask yourself. And then, if you look at their free cash flow, you can see that over the years, it has increased to 43 billion renminbi, or close to $6 billion US dollars in 2024. Pay close attention to this. But if you look at their capital expenditures, in 2024, they have decreased to 14 billion. So free cash flow was up, but also their capital expenditures was down. And you have to ask yourself, if this remains around this level, I mean they'll have a slow growth rate, or it will go back to 22 billion and even more renminbi. Because if that happens, their free cash flow will decline in the long term. So you have to be very careful how you value this company, because you can have a double from this level or 3x. And I don't know the answer if you have a double or 3x. So what do you think? From this level we have a double or 3x in the next 5 years. My prediction, a double, but also depends on the price you pay. So to answer the question, JD.com versus Alibaba, here they may be close, quite close. Even if Alibaba has a better business model, because JD is so small, but only if they continue to grow, JD can deliver a return like Alibaba in the next 5 years. Maybe, but only if they can maintain their margins of about 4% and they continue to grow their free cash flow from this level. They can't do that because they do other things, who knows? Then Alibaba is still the best, the leader. And you also look at the market share. Alibaba has a higher market share than JD.com. But of course, what matters at the end is the price you pay and when you sell. Right? Because you can have 94% in just a few months. You see here, if you buy at the right price. That's why, if you want to know the right price for JD.com, when to buy and when to sell, you can join my membership. Simply go to my profile, press join, scroll down and choose the level you want. Join. And I can do a video only for you. How to value JD.com and what the right price to pay for it and when to sell. And if you want more, better investment ideas than JD.com, you can join my Titan Investor here, where you have access to my portfolio what I buy, what I sell, and also an investing course, From Zero to Expert. It will teach you many things about investing. So that's it. I'll see you in the next video.